everybody. So today we're going to be discussing VTEX, which is at the moment it's situated in the tech sector, which has been heavily punished over the past 2 months, maybe even beginning of December. Now VTEX is a software company, and it's well run, and the fundamentals show a completely different story in relation to the direction in which the stock is going at the moment. And we feel that this is happening because of the algo bots of basically removing the cash flow cycling out of tech into other sectors. However, these investors will eventually step back into tech when the AI starts to settle down. However, with the reason we've kept hold of this stock is fundamentally the stock has performed really well over the financial year. It's performed really well quarter on quarter, and in the next 5 days it's about to release its earnings report. So with that being said, at this moment in time we do have the drawings on the chart. Hopefully you can see them, and what we've noticed is as prices began to be forced downwards and closing below the 20-day, the 50-day, and the volume average price is also been closing bearish. What we've noticed is it's come to a point at the moment which is around $3, which is a previous historical key area of interest, and the price has begun to stall ever so slightly. And what we expect to happen now is, just before those earnings reports are released, we still believe that the projected values for the business are going to be positive. And with that being positive, and the fact that the stock has substantially amount of its float locked up at the moment in institutions, we do see this stock beginning to turn bullish. It's just been punished in the sector, unfortunately, of technology. We've just put a post out on this new StockWits. It is stockwits.com. Let's have a look. Yeah, and basically what we're saying is we've been analysing Vtex over the past year, and quarter on quarter, and a pattern did begin to emerge, revealing a business in the tech sector which has been punished heavily of late, with money flowing out. What we're saying is something does not ring true with investors on Vtex, and the big question is why, what is actually going on. And we all think it's down to this AI uncertainty and fear factor among investors, or maybe it's just manipulating markets. You know, I've said it live right now, I do feel markets are heavily manipulated. So with this being said, we're sticking with our valuation of Vtex. The business is run with excellence by the directors, clearly know what they're doing, and Vtex is unfairly being punished in the sector, which is the tech sector at the moment. Vtex is still valued by ourselves around $5 US, and as we've said, the float being soaked up and held, we're sticking to our game plan. It's a good business and it deserves to be in our portfolio, and it deserves to get publicity across the market. So some of the data that we hold at the moment, this is the quarterly data, current quarterly data. I don't know whether you can see that. Let me see if I can zoom in. It's not great, is it? Okay, I'll talk through it anyway. So what we're saying is, at this present time, okay, it's debt to equity, okay, is nearly nil. Okay, so it's got no debt in relation to stockholders' equity. As you can clearly see, debt to free cash flow, again, less than 0.10. What we find quite interesting is the free cash flow to capital expenditures 27 times. So it's earning 27 times in free cash than it is actually using to create that cash capital expenditure. Okay, out of the earnings before interest and tax, okay, basically all the bullshit, it's converting that cash to 200%. Okay, information have we got? Valuation at the moment is $5. Current price is $3. We value it at $5. All we've basically done there is taken the current market capital, taken away the debt, added back the cash, and then converted that with the total outstanding shares on the market at the moment, giving us a value of around $5 for the equity, i.e. the shareholders, and we're targeting roughly anywhere between $330 to $340 for that reversal, and as we say, at this point it's gone beyond that, and it's beginning to now reverse, sort of stall, slow down, and we do expect this to break this trend in the coming weeks. Is there any other information that we've got for you? Estimates. Okay, so estimates at the moment, for the quarterly report, we see debt being at 3.5, cash 199, operating cash flow 7.33, free cash flow again 7.33, with EBITDA 11. If we go back to the current quarter, last report, it was 3.43, 202.554, so a slight decline on cash. OCF 8.17, 7.51, EBITDA 5. So we expect to see earnings before interest and tax increase. Operating cash flow and free cash flow, we do expect a small decline on those, and this is all based on the weighted estimated figures for the next quarter. What does that actually mean? So what it's saying is the forward price for this stock is roughly, we estimate to be around $5.10, and to get to that point, it's only trading roughly around 17 cents per day, so it is going to take a number of weeks to get to $5. What's the difference now? So if we say 5, take away $3, divide that by 0.17, so we're looking at roughly two weeks, something like that. But because the float is so low at this moment in time, this could move quite quickly through these levels, up towards $5. So yeah, earning support in roughly 5 days time. Best of luck, everyone.